Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. I thought I'd talk a few minutes today about the top 15 questions people are asking this tax season. There was an article written by Josh Smith that was published on credit.com on March 15th, 2018, and he goes through what they highlight as the top 15 questions of tax season. I thought this was a good thing to talk about today. I'm going to rush through a couple of these because we've only got so much time, but let's talk about the top 15. Probably top number one is, when are taxes due? Now this year, as the past couple of years, tax deadlines are a little different. The usual April 15th deadline lands on Sunday this year, so the deadline should be the 16th, right? Well, no. They're actually pushing it out to the 17th because April 16th is something called Emancipation Day, which is a District of Columbia holiday. So if you want to file your returns on time, April 17th, and then with an extension, it goes to October 16th. So next one, when can I file? Well, that's kind of late to ask that question now, but basically the IRS started accepting electronic returns on January 23rd. So it's good to go right now. When will tax reform affect my taxes? Well, this is kind of a trick question as well. So most of what goes into the tax reform is not going to happen until 2018. So most of what happens in 2017 is irrelevant. So the taxes you're working on right now really don't have much to play with the taxes that are going to happen after the new tax laws hit. But you're operating in those times now with your W-2 earnings and all that stuff. But as far as filing tax return, it's not going to hit till the end of the year. Now, next one they ask here is, what can be expensed? And I hear this all the time with my small business clients and my what I call Schedule C clients. Those people who are freelance works. And this can be tricky. Tax returns can be significantly reduced by do 1099 quarterly taxes, but one way to offset self-employment taxes is to expense correctly, and most anything can be expensed as long as you have proof that it was used for a business purposes. And I always tell clients that's the key. If something was used for a business purpose, then it can be written off. Now, another question we get a lot of is, what's the minimum income level required to file taxes? And this is not a simple cut and dry answer, as it says in this article, and it really depends on your filing status, the source of the income, age, and other factors. In general, if your gross income exceeds $10,000, then you'll have to pay federal tax. But again, it really depends on the individual's, what your situation is. And if you have, what they call a side gig or something like that, and you have anything over $600, then you have to file taxes. Next one is, how do I file my taxes? I'm not even going to answer this one. Obviously, you can go on to the IRS website and do a free file. You can contact a licensed public accountant or a CPA or a licensed tax preparer and take care of that. You can also go online. There's a bunch of free sites. Just pay attention to what you're using and make sure that, for example, if you're going to get into doing it on the internet, make sure it's a secure site that you're using. Next question is, how long should I keep my tax documents? And I addressed this, I believe it was in last week's show. In general, you should hold on to your documents for 3 years. That's because in the event of an IRS audit, you'll be expected to present the last 3 years of documents. Now, in much more extreme cases, such as if they believe you have fraud or something like that, you could keep them for 7 years. So I generally tell clients, if you've got a very simple tax return, you're probably safe keeping them for 3 years. But if you've got a business or anything that's unusual, like you sold stocks or something like that, keep them for 7. Another question we get a lot of, who can be claimed as a dependent? Now, this gets complicated as well. And I hate to say that about each of these, but they are, and that's why people like myself are around to help you navigate through this. So each dependent comes with a tax exemption. So it's important that you solidify who can and who cannot be claimed. Basic. A dependent is anyone you support financially. Now, the key to that is you have to provide at least half of their support. Okay, next question. I got this question the other day, actually, from a client who owes money to the IRS, and we talked about setting up a payment plan. Does a tax audit negatively affect my credit? Now, in general, owing taxes to the IRS doesn't, as long as you're in some sort of payment plan or you're making your payments. If you can pay your taxes through credit, such as a credit card, personal loan, standard credit factors apply. Credit report items such as payment history, credit utilization, credit type, and more all still affect your FICO score, even if you're paying off a tax bill. So The way that this can affect you is if, for example, you quit paying on a payment plan or you just don't file and the IRS assesses taxes against you, then this could negatively affect your credit report because the IRS in many cases will file what's called a tax lien or a tax levy against you. So not only could it affect your credit, but could affect your job as well. In many cases, if you quit paying, the IRS will do what's called a levy on your wages, and they'll actually send a letter to your employer or send a letter to your banks and have them swipe the money right out of your account, or in the case of an employer, take a very large percentage of your weekly paycheck or your biweekly if you get paid biweekly. Next question here, what is the earned income tax credit? And it's a low income tax benefit for low to middle income families. There's specific requirements that talk about that, so we can put that off on for another show. But are unemployment benefits taxable? And I get this question a lot. And a lot of times it comes up because the client will say, well, Ralph, I got this 1099-G and I'm not sure what to do with that. And the truth is, yes, unemployment is taxable. And most places that pay unemployment, which would be the states, offer the option of taking taxes out of that. So one of the things that I recommend is to do that so that you don't have that big surprise at the end of the year. But of course, if you're collecting unemployment, you're already, probably got low income, so you might need that money anyway. Next question, what are qualified education expenses? Those are the costs of college education. This includes amounts paid for tuition, fees, school supplies, and other student costs. That would also include room and board, insurance, medical expenses, transportation as well. Again, there are very specific rules with this. There's different credits that you can take based on this. The key to this is make sure you've got what's called a Form 1098-T from the university or the educational institution. Next thing, is child care deductible if you work full-time? Well, yes and no. It really depends on your income. It also depends on, how much, the cost of these things are and the children's age. Basically, if you work full-time and your child is under 13, you might qualify for a deduction of up to $2,100. So again, we'll take a look at that. Next question here, number 14 is, do I qualify for the child tax credit? This can reduce your taxes by $1,000 per child. Now, one of the cool things we'll talk about for 2018 is they're doubling this to $2,000, and at the same time, they're raising the cap on where this phases out. What I mean by that is I have a lot of clients that technically, they would qualify for the child tax credit, but once you reach a certain level of income, they phase out or completely eliminate that tax credit. And as I'm doing preparations, looking at individual clients now, we're looking at 2018, and I'm seeing many people who were phased out of that deduction actually being able to qualify for that deduction moving forward. So that should be up to $2,000 per child as a tax credit. Now, of course, that's not going to pay for the care of a child, but at least it's a start. And the final one thing here says, I'm married, but we keep our finances separate, so can I file as single? I get this question a ton of times. The answer to that is no. If you're married, you can file separately, but you cannot file single. So you have two options, maybe three. You could file jointly, with your spouse. You could file separately, or in some cases, you might qualify for what's called the head of household. Again, this takes some navigating with somebody who is really understanding of the tax code. So I hope these top 15 questions answered some of the pressing questions you have as we get closer to the April 17th tax deadline.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.